Okay, we are live, I think. Hello, everybody on social, YouTube, Facebook, all abouts online. We are excited to talk to you today on Shand on Demand. Can you believe that it's already February 18th? I don't know about you guys, but I feel like this is kind of like a getting older thing, right? Like every year it keeps going faster. I don't know what's going on, but when I was 10, it felt like forever to become 16 to drive. Now I'm feeling like life is going so fast. Ah! Okay, well, we are mid-February, actually crawling to the end of February. And so now's a really great time to look back and reflect. And so I'll share with you this morning, my husband and I were walking. We went on a husband-wife date walk. And one of the best things we do for our marriage. We don't love going for dinner and just having the traditional date. I don't know why. We've never loved it. And so we love dating with our friends, but we've never loved to just go on a dinner date. So we go walking. And when we were walking, we were reflecting. And we were reflecting on some of the things that we did right last year, but also some of the things that we didn't do right. And one of the things that always comes up is, how do you keep more money? How many guys have big goals this year? Put me in the chat. For real, like how many guys have how many of those goals require you to have more cash flow? How many guys put yes? If it requires you to have more cash flow, put yes. So I can tell the difference. If your goals this year require you to have more cash flow, put yes. Okay, so one of the things that really transformed my wealth creation was changing my employee mindset, right? Employee mindset is, I work harder, I pay my taxes, I buy a house, I have a kid and I write off a kid, and it's just not enough. Do you know what I mean? Like it's just not enough. Like somehow the equation we've been taught just hasn't worked out for most of us. And so years ago, even before I started making good money, I set the intention. I kind of did that godly thing, or that law of attraction thing. I don't know what your belief systems are, but I started to say, I just know, like, I'm banking on a better future than the one I had, than the one I just finished. Like I'm banking on a better future. And in order to do that, just like having children, I started preparing my programs inside of my company to have children. And sure enough, 6 months later, I meet the guy and I'm moving forward and having children 90 days later. Okay. And so I'm a really big fan on, if you act as if and you start operating as if, things come together. There's nothing worse than a great opportunity landing in your plate and you cannot take action. And so there's something magical, something miraculous about planning for something and moving forward on it. I just said to one of our clients, I said, why don't you guys plan for IVF? And if you plan for IVF, then what's going to happen is you're going to generate more income, because IVF is coming down the pipeline, and it's expensive, right? And so when you plan for a more expensive future, you start freeing up more cash flow, or ending up on calls like this. So today on Shand on Demand, I have a guest with me who's going to join me in 2 seconds, and we're going to talk about maximizing your profits, which is not taught in any masterminds. It's not. I've spent 25,000. I've spent hundreds of thousands, like 100,000 for 2 meetings a year. Now the going rate I hear is 200 to 225,000 for my income bracket to go into masterminds. And there is absolutely nothing. I hear somebody's background noise, Keith. There's absolutely nothing taught in those masterminds. Well, what's being taught? Nothing. What's happening is you're networking with the right people who are giving you insight on your goals and how to achieve them much faster. So I'm going to welcome Tommy to the virtual stage with me. Keith, if you can bring up Tommy.
How we doing?
So good, Tommy.
How are
It's so
you?
good to have you here. I feel like it's been a bit. How you doing?
It has been a while. Good to see you. We took 100 of our employees to Mexico, got home yesterday, and
So
I apparently sang the whole time because I'm losing my voice, but I'm excited to be here.
I know. I knew it was a tight turnaround for you to come here. For some reason, is he frozen to you guys? Like he's frozen to me?
Oh,
Is
I'm
he?
frozen
Black
on my
screen
side.
right now.
Yeah, you're frozen, Tommy.
I'm
Maybe
gonna
you
take
could
them off and then put them back on.
okay, take them off and put them back on. Okay, so Tommy is going to have a conversation with you guys today about, are you gonna pull them back up? About
Yeah,
how to maximize
still
your profits.
frozen.
He's still frozen. Maybe Tommy, pop your video off and turn it back on.
Yep. Let me unplug my camera real quick. Just one sec.
Yeah, yeah. So he's going to talk to us all, and I'm going to be taking notes. I literally have my little hardcore pen here right now, and I'll be taking notes because I am always learning in this area. Okay. And because the game of wealth isn't, it's like you've got to free up more money as you're building to be able to continue to have more money. And that's, again, I can't tell you how many entrepreneurs I see that they pour every dollar they have back into the company. And I understand the mindset behind it, and I appreciate the faith. But the thing that had me start making a lot of money was paying myself first. And it wasn't until I started paying myself first, even when I had the bills, right? Even when I needed to use the money for other things, it wasn't until I started paying myself first that something shifted inside my mind. Secondly, when you start to build a slush account or your pay yourself first account, as that grows, your confidence starts to grow. Does that make sense? And so, awesome, Tommy, you're unfrozen, so that's perfect. So, Tommy, first of all, you're going to help us get our money right. And my question is, I feel like it would be better if you just talk versus me interview you. But if you want me to interview you, I do have questions. What would you like to do? What would be better?
I'm happy to break it down a little bit, and then maybe even some questions and some of the
Okay,
trainings,
perfect,
and
perfect, awesome.
then whatever questions anyone has. I'm here to help. Whatever we can do to keep more money in everyone's corner. Like no one knows it better than you. You moved your whole life to save money in taxes, so it's
Well, yeah,
important no matter what
it was
level.
it was a big deal because unless you're taught, like you guys, I didn't know, like I couldn't write off, or maybe I can, but I was told I couldn't write off land. I can't write off stocks. And so I had a really big year in the business. I did what I thought was good things and invested, and then found out that pretty much almost all the capital I had left in the pay yourself first account was going to go to taxes. And it was millions of dollars, you guys. And I panicked because I was like, I actually cried. I cried and I looked at my husband. I said, we have to leave California. Like I am doing 2 or 3 events every single month. I'm working really hard. Who else is feeling like you're working really hard? Like I'm risking is hard because it's emotional, right? And that takes up the most bandwidth is the emotions. And got to the end of the year and I'm just like, oh my gosh, we had all these great investments and we risked, and you're supposed to win when you risk, and they're taking all my money. And so thank God I had a good friend who I never thought I would do this, but he said, you got to buy a jet. Now you guys all might be laughing and saying, oh, that's way over my head. It's one good year away. It's one good year away. You know what I mean? Where it's like, so I bought a jet, now I had an asset, and I could 100% write off the jet. So you guys think about that for a second. If I have to give $200,000 to the tax man, and the jet costs 200,000, just pretend, okay? And I could keep the asset or call it a house, right? I got $100,000 at the end of the year, and it's going to cost $100,000 to buy a rental property, but I get to keep the asset and not pay the government 100,000. But we don't think like that, because unless you have somebody around you, you start to panic and you cut the check. And that's a problem. So Tommy, where do we want to start here?
I think this is great. Thank you for kicking it off. I know the jet was more than 200 grand. We'll start there, but I will tell you that you're absolutely right. Like not only the jet, but the G-Wagon, the Range Rovers. You go to YouTube University, to your point, and everyone's telling you to buy some sort of a vehicle. So to simplify this and bring it right down to reality for any of you that are just getting started, sometimes tax planning before you're making money feels like it's also too early. And the biggest point that I want to make is that is not the case. And the reason for it is everyone wants to make $10,000 more a year. It is very rare for people to combo that thought with how to save $10,000 a year. And when you can go generate that 10,000 and save the additional 10,000, the compound of 20,000 is ultimately what's going to build you wealth year over year. So it's not what you make, it's what you keep. And what I'll share with you is nobody, and Shanda, I'd love to hear your thoughts on this as well, because you'll enjoy this. I know no one cares about your money more than you do. And I mean that because I've had financial planners. Tommy, I only make money if you make money. Oh yeah. Are you going to lose money if I lose money? I don't think so, right? What investments align with your goals? And when you understand your short-term goals and your long-term goals, now you get to make educated financial decisions that are allowing you to make decisions that are aligned without going and buying a G-Wagon or a jet. It could be something totally different. A personal story that I'll share with you. We started Prime back in 2012, and my parents got divorced when I was 3. My mom was a real estate agent. My dad owned a real estate brokerage. So I take that back. I'm going to bring you all the way to when I was 3. My mom would go sell a house and get the commission and give it back to the person she sold it to because she wanted him to furnish the house. My dad would own a brokerage and make a lot of money. And I grew up with my mom. And I always remember thinking, like, there's got to be somewhere in between this helping people and making a lot of money that makes sense. So fast forward, when I turned 18, I went and knocked door to door selling pest control in Raleigh, North Carolina. That was the start of my self-employed career. For anyone that lives in Raleigh, I'm sorry for bugging you. I still feel bad about that, but it was a cool gig. I made some money and had a $10,000 tax bill, and that money was gone. I already spent it. I was 18. I thought I was the smartest human in the world. I had just made 40 grand in 3 months, right? So I learned very quickly that whether you're purchasing a vehicle, whether you're writing off your phone, your internet, your power, the cost of being a part of this beautiful community, this is an advisory and a consulting expense, not education. Why? Because education has limitations. They're going to want to see an accredited university. When Shanda said earlier, a lot of it's just changing your mindset. You go to work and exchange a W-2, time for money. They take taxes out of your check and give you what's left. A tax return is the worst thing in the world, because all that means is you gave the IRS an interest-free loan and they said, whoops, we took too much of your money. Here's some of it back. And then everyone's like all excited about it, right? When you're self-employed, you go generate your own revenue, invest back into the business, and then pay taxes on what's left. So the number one recommendation that I have for you this year, and it's really good timing for 2025, is break your year up into months or quarters. If you're a planner, do weeks, but at quarters at the very least. You go January, February, March, quarter 1. What is your profit and loss? How much money have you made with a W-2 if you still have one? How much money have you made self-employed? And how much money have you invested? Because then what that will allow you to do, if you know on a quarterly basis, October, November, December now turn into business shopping spree season. And when bring this full circle on the jet, when you know your profit and loss October, November, December, you have to make decisions that are going to align with your goals, or you're going to give that money to good old Uncle Sam. Yeah. Or the tax man wherever you live, right? So
I did a jet in 3 weeks.
Go ahead. In December, I'm sure when you said it, I'm like, we got 2 of them that we just rent out. They're out in Vegas, and it's like they're just getting rented full time. And it sounds so crazy, but if you can take, depreciation is king. And one of the long-term goals that I mentioned earlier, I've got 2 little girls. I got a 4-year-old and a 1.5-year-old. And part of the tax strategy is I pay them to work within the business. They pay their money that they just made from the company into a retirement account and into a Roth. And by the time they're 25, they'll be able to lend $1 million against these policies to either go to college, buy a house, hopefully, I do my job, start a business. And it's legacy, right? Now you get the option to not only save the money for yourself, but to educate the future in addition to. But I want to start, and then some of the questions that you have, Shannon, I want to make sure I get them answered as
Yeah.
well.
Well,
But
I want to
go
say
ahead.
like this is such an integrous this is such an integrous message for me to bring to you guys, because when you start thinking like this, you actually start getting excited. I'm not saying buying jets, but you can have one good year and buy a jet for real. Okay, you can buy fractions in jets, right? It's like, and so again, like think bigger versus thinking smaller. But like I'm pregnant right now, Tommy, with a little baby boy,
No
13.
way. Congratulations. I didn't know. I
I
had
am
no idea.
already looking at, he is born, his due date's August 20th. And I am already talking to my team about an insurance policy that my son can borrow, my second son can borrow off of. But my first son is literally in a position where he's got total distributions of $7.9 million by the time he's in his early 20s.
I love it.
Okay, like, and it cost me almost nothing to put that together. I paid him inside the company. He does things like we have videos of him speaking on stage. We have, we just have all these things that we document. And now he's about to take YouTube courses. Well, he started taking YouTube courses. Our advisors sat down with him, had a meeting with him, documented that meeting. He's 9, you guys. And they're like, how serious are you? We can increase the pay of your pay inside the company if you are to study your YouTube and start producing X amount of videos a week or a month. Will you do that, Zach? And he says yes. And so now the money can be paid to him, go right into whatever, self-directed Roth IRA or an IRA or whatever. And it's money, you guys, that same with like paying for teachers or things like that. It's money. We're spending so much money and we don't realize that if we ran it through and are you going to talk about LLCs at all? Like
Yeah,
LLCs or S?
happy to. That's
Like,
great.
because there's different entities. How many guys do not have an entity and you need one? Put an N for need one. Put an N in the chat for need one. You don't have an entity and you need one, like an LLC, an S corp, a C corp, whatever, right? Like put an N in the chat. Please, like, let us see, right? I know on social I can't see yet, but put an N in the chat for anybody who needs one. Okay, so that's important to know because it makes a big difference. And I'm going to have Tommy to speak into this, but when you realize how much money you're spending on your regular life for your cell phone bills or your Cox cable, or the fact that you could rent your house out to yourself for a webinar, or like a challenge online, the Augusta rule, right? Like there's things you could be doing that you're paying yourself that you're not getting taxed on, right? That people don't realize. So what they're doing is they're just taking their money, paying taxes, and they don't realize that you can take a portion of that money and allocate it differently. And it doesn't take a lot of crazy strategy. It just takes sitting at the right table like we are right now. So let's go a little bit. I'm very excited for my son. I'm like, 9 million, dude. I was
Yeah,
like
that's so cool.
I was play fighting with him on the bed last night. I'm like, I don't know. My mom didn't do that for me. And he's like, I'm rich, mom. He's like, I'm gonna feed all the homeless people in America. I'm like, good for you, buddy. It's like, you better put it into another plan and multiply it so that then you can feed everybody. Okay, so talk about a little bit about like this whole LLC, C Corp, stuff like that. Oh, awesome.
I had to go find this real quick. And I don't know if you know this or not, but Steve's having another little boy as well.
I didn't.
And I'm gonna be the uncle. He's having a baby with my sister. I'm excited. It's gonna be awesome. Yeah, we're really August 3rd, I want to say, is the due date. So they're gonna be close.
Really close. I love that.
We gotta get you and the team out here to Park City, by the way. We'll
Ash
get
has
you
already
guys out.
declared, Ash
It'll be
already
fun.
declared that we're buying a penthouse or something in Utah. So
Get out here.
yeah.
All right. So everyone, entity wise, I really like this visual because it helps identify how many options you really have. And I really tried to just slim this down and make this as easy to digest as possible. But whether you're international or you're US based, I like to break this down where it separates it into 2 different categories: informal and formal. And there's no tax code that says you have to be the best business owner, right? There's tax code that says as long as you have the intent to generate income, you can take business related deductions. And all of you are that. All of you have that intention no matter where you are. So to see that many ends, let's get you a business entity set up so you have a solid foundation. to build the empire that you're growing. From an informal standpoint, sole proprietorships or general partnerships, the reason I don't recommend that to anybody is because there's no asset protection and there's very limited tax benefits. Okay, so to flip the coin to the other side here, I love starting as an LLC for US based, and then international, it's usually going to be limiteds or incorporated. But LLCs are awesome because they give you the asset protection. You can show the intent to still take startup and organizational expenses, right? It takes money to make money. The IRS understands that. We can thank restaurants for taking a long time to become profitable. Think about how much money gets outlaid when you open up a restaurant. The overhead of this business that you're operating is so minimal in comparison to a lot of these brick and mortar type businesses that you still want to utilize those deductions, whether it's $1 or $1 million. You still want to show you're investing into your business, right? Now, here's something that's very important for those of you that are already profitable. If you're listening to me say this and you're like, I already have an LLC. Next, what other deductions can I take? My question to you is, how is the LLC taxed? Because that's the next part of what you need to take into consideration is, great, you have it. And if you don't have it, we'll help you make sure it's set up properly. But if you have an LLC and you've generated active income, you should look at that being taxed as an S Corp. Okay, S Corps are great because they allow you to then pay yourself a salary or a distribution, but it also allows you to avoid half your self-employment tax, which is Medicare and Social Security. So think about this with me real quick. If you made $100,000 last year, and what I'm saying to you is you have an LLC and you haven't seen the tax election, if you change your LLC so that it's taxed as an S Corp before March 15th and it gets accepted, we can go back all year last year and save that 7%. What I just told you, if you're in that position, will save you $7,000 per 100 grand on an annual basis. And it's one of the only things that we can still do right now to impact your previous year. Okay. So
That's
please
big.
take that serious. Go ahead.
Well, that's big. So something that I want to share with you guys, and I don't want to derail anything too much, but because I want you to keep talking, Tommy, because there's so much in this bag. But your CPA is not responsible for your tax strategy. Okay. Some of you guys have never heard that before. When I heard that, it was a big aha to me because I was like, that's who I thought would figure out my tax strategy is my CPA. Like instead of just a bookkeeper, I've got a CPA. And although they understand tax, my CPA is put with two different tax strategies. Now that I'm in Puerto Rico, I don't really need a ton of tax strategy, but it's still communication back and forth to stateside to here. But my point of sharing that with you is you need to know that because if you go to like even if you take what Tommy just said and run back to your bookkeeper or whatever, they can look it up and go, oh yeah, we could do that. The problem is what else could you be doing? You see what I'm saying? Like I'd be willing to bet that most of you guys, if we went back and looked at your books over the last year or even the last couple of years, how far can you go back, Tommy? I'm curious.
Usually it makes sense to review or look at the last 2 or 3 years. Anything after that, you're potentially increasing audit risk. So depending on if you left a lot of money on the table 5 years ago, well, it's worth reviewing it and seeing to go back up to even 7. But after 2 or 3 years of a review, move forward, change the future. Let's look into the past and see if we can benefit. But we don't want to raise red flags and increased audit risk for no reason either.
Yeah, no, absolutely. But it's wild to me the difference between structure and making your top of your line. Like you guys would, the top of your line when you make money, your accountants to make sure that the bottom line lines up. Does that make sense? Like it adds up. it is not to give you strategy on how to keep your money. Okay, keep going, Tommy, because it's big.
Yeah. Yeah. So from an entity structuring standpoint, what I like that you said as well is when you take complicated entrepreneurial questions and you ask an attorney, usually the answer is, well, it depends,
Yeah.
but here's how to protect your assets. You take that same complicated entrepreneurial question to an accountant, to your point, it's, well, it depends, but you can just keep it together and it makes my life easier to file. They want to just put the numbers in and get you the numbers back. Tax planning and tax filing are two completely different things. And a lot of what we call that with the tax firm that we own is proactive versus reactive. So whenever you're setting up an entity or whenever you're setting up a new business, here's the three things that I tell everyone to take into consideration. Number one is privacy and protection. How much privacy do you want? An example I'll share with you on that is I don't want my name and my address listed on state websites. I live in Utah. I have a Wyoming company that owns my other companies. And if that seems too complex for some of you and you just want it out of your state, that's fine, but let's not have your address on a state website, right? A lot of you are putting yourselves out there and you're building a brand and you want to have some separation between your personal and your business. And that's one of the things that we help clients understand. So privacy and protection. Protection also changes as your wealth grows. It's not about where you are right now. It's where you're going to be in 1 year, 5 year, 10 year, and beyond. And every year it truly is worth reviewing your goals, making sure that you have the proper insurance, the proper coverage, and moving forward from there. Okay. One of the strategies that I utilize, by the way, and all of you can write this down. Matter of fact, let me go to this slide real quick and I'm going to come back to this one. Here's a really cool tax strategy called the Augusta rule. And I'm going to combo this with privacy and protection.
This helped me so much in California. This was like a basic scenario that my accountant didn't tell me. It was my tax strategist. And my accountant's like, "Oh yeah, you could do that." And I'm like, "Why wouldn't you tell me?" This is what I mean by it's not your accountant's fault. It's just not the rule.
Yeah, for sure. And thank you for that. It's one of those things like the first time you write off a home office, you find a way to have a home office forever. The first time you implement something like this Augusta rule, you continue to find ways to implement Augusta rules because this is an easy $5,000 to $20,000 tax saver for our clients, depending on where they live. So here's how this rule works. It's section 280A. And every year, the Masters Golf Tournament goes to Augusta, Georgia. Back in the 70s, this guy got audited for not claiming the income on renting out his house. So it gets passed through Congress and the Senate. And this is going to be a nationwide thing now. So you can do it anywhere across the nation, not just Georgia. But what this rule says is you can rent your house out up to 14 days a year. So how I utilize this strategy, and when I talk about the privacy and the protection piece, on the 5th of every month, I have this ridiculous rental agreement that I feel like such a dummy filling out. I'm like, Tommy's business rents out Tommy's house, exchange money, transfer it from business to personal, and then what did you cover? Go over your bookkeeping like I talked about from a profit and loss standpoint. Go over your minutes, your meetings, your asset protection, your net worth. Go over some goals and go over some strategies for the next month. These are things that you all do anyways. Why not put some documentation in place, transfer the funds, and think about it this way. If every month I went and rented out the Marriott Conference Center, every one of you would say, yeah, that's a business expense. You rented out the conference room. I'm just repurposing that and doing it in the comfort of my home and still transferring and renting my house out from my business. Right? So sometimes just changing the mindset on where your
changes
money's
everything.
going makes a
Yeah,
big difference.
so you guys, so what I would do is I would do an online challenge, right? I would have
Love that.
14, I usually I wouldn't have 14 challenges in a year, but I would have however many, like 7 or 8 challenges or 10 challenges in a year. And it's like that day, it's like we start early in the morning, we do prep meetings in the morning. I go live for an hour, then I go live for an hour on VIP, and then there's post promotional material that needs to go out, and then we shut down for the day. And then we go and we look at comps on hotels or Airbnbs or things like that, and we find the most comparable comp. So in California, we use like penthouses at hotels because I have an ocean view home that, by the way, I bought for 1.7 million. I put I think I put 1.1 or 1.2 million into it to tear it down and rebuild it and new finishes. And, it has a $10,000 a month mortgage on it. And so when I look at a penthouse in California, I'm looking at around $10,000 a night for a really nice penthouse. So my house rents back to the company. Now, to break it down, I don't want to get stuck on the 10,000. If I pay myself 60,000, or if I pay myself $100,000 in a year and I do 5 of these Augusta rules, I get 14. Do you guys get what I'm saying? I just made 10, 20, 30, 40, $50,000 in rental that I'm not paying taxes on, like California taxes, right? So just to get that, because you're using the money. People don't realize if you're not getting by very well, you're using the money for bills. Okay, so why not transfer on an Augusta rule rental versus just pay your bills that you pay taxes on? Okay, keep going. It's just such an aha when people wake up to some of these things. Somebody asked, is that available in Canada? I don't know.
I don't, it's not called the Augusta rule. There's something similar. I can't remember what it's called. There is a way that you can do it and show it as a business related expense, but it's not called the Augusta rule. Let me figure it out. I can't remember off the top of my head. There is a way to do something similar within a reasonable rate out of Canada to use it as a business space. Melanie wrote me and said, you definitely can. Is there a limit though, Melanie? I can't remember. It's not called the Augusta rule out of Canada. But
Well,
anyway,
and you guys, if you're in Canada, go to your CPA and ask them, look it up, and then send them the description and say, what do we have like this? Okay, where do we want to go next, Tommy?
Number one was privacy and protection. I just want to make sure I get through the 3 for all of you to think about on your own entities. Number 2 is tax benefits, profit or loss, good or bad. How do you put yourself in a better position? And an example that I'll share with you, a couple years ago on December 29th, I had a buddy call me, Tommy, I need some money. I've got a 4-plex. If you give me $100,000, I'll give you 33% of this 4-plex that I have that's by my house. Call my accountant first thing. As much as I want to help, accountant, how much is this going to save me in taxes? If he runs a cost seg, it could save you 40, 50,000. Okay, cool. I wire the money over. It was a terrible investment. I haven't seen a dollar back. It was an awful investment that I had made. I helped a friend. I saved money in taxes. I don't lose sleep at night. I get the ability to share this story with all of you that we are still friends. I still give him a hard time, but that's my decision to give that money, to save that money in taxes. The asset is still there. And in business, there's always mistakes that are going to be made financially. But when you can commit with both feet in and say, here's the money, I'm going to go make this happen, and it's going to save me money in taxes. In my opinion, moving forward and focusing on what's next is so much more important than dwelling on the past. And it saved a lot of relationships for me that previously I would have burnt because I would have been frustrated about it not working out the way it was mentioned in the beginning. So I think it's a great way to be accountable as a business owner to know these numbers as well. And then number 3 is credibility. And I know we're going to have another session around this later on, but when I mean credibility is you are a business owner. Everyone has doubters. Everyone has haters. The family's uncle's cat that says, are you sure you can do this type deal? You are a business owner, play the part. I think the psychological aspects of being a business owner are very important, but also credibility for banks and lenders. Okay. Banks are businesses. They make a lot of money and they really want your business. When you don't need money, everyone and their mother sends you a credit card application, right? When you need money, it tends to be a little bit more difficult to come across. So when you are a legitimate business and you have a business name, an EIN, a profit and loss statement, businesses know that people that are self-employed statistically make more than W-2 earners. So because they want to make money, they're more likely to lend you money. So when you can show yourself as a business, privacy and protection, tax benefits, and credibility, start as an LLC, identify if an S Corp is needed for those of you that are generating income, and review it on an annual basis to make sure you're not overpaying in taxes.
So good. I know. So these guys, so people who are meant to be live on the 21st, I think, of February, it's posted in the group, and on Sundays we send out an email around this. But in meant to be live only, we're going to go deep into corporate, how to actually build up your credibility so you can build up your corporate credit, which is a game changer, right? Tell the difference, Tommy, between personal credit and corporate credit.
Yeah, I love this. And it is more US based when I talk about credit, just because I see some Canadians in there that you can build a corporate credit out of Canada as well, of course, but US based, you've got a legal name, a social security number, or an ITIN, and a personal FICO credit score. We help a lot of business owners do the same thing business wise, where you want to have a legitimate business name, an EIN, and a PAYDEX is what it's called. It's PAYDEX. It's a credit profile for your business that ranges from 1 to 100, and 80 to 85 is like you having a 750 to an 800. But we're currently getting over $4 million a month in business credit and corporate funding for our clients. And not only is it gas cards, store cards, lines of credit. I've never talked to an entrepreneur that says, I wish I had less money, right?
Yeah. But Tommy, it does take a mindset shift, because for many years, so you guys, for many years, I had the employee mindset, which was I make money, then I figure out my taxes and hopefully I get some good advice. And then I try and keep as much as I can, and whatever's left, let me try and invest it. But then you also have to pay back into the company, right? And then once I realized this changed, because I started to ask questions with some of my friends who would go, okay, I'm going to start a business. And they're like, there's nothing. So they go open up an entity. And then in their first year, they create insane results. And I'm like, how did you do that? So I'm going to give you a nugget, a mindset nugget. This is not an Amazon bestseller mindset book. This is not Barnes and Noble or Chapters for you guys in Canada. This is not what you're going to get in your personal development book. Okay. That's trying to help you expand your mindset around abundance. Okay. Like, let me just give you the hack. Okay. The minute you know who you're selling to, write this down, who you're selling to. Some of you guys are going to realize the cost of indecision has been killing you. As soon as you figure out who you're selling to, what you're selling them at a profitable rate. So you're who, what, at profit, and how. Okay, like how do they buy? Is it a webinar? Is it a challenge? Is it events? That's your business model, right? As soon as you figure that out, there's no reason why you can't figure that out in 1 to 2 quarters. There's no reason, other than you're just not making decisions. You're trying to get it right, which you can't get it right until you do it wrong, right? That's what tells you how to do it right. So imagine this, if you're a brand new business owner, and this is what was my big aha. As soon as you figure that out, it's like now if you had more money, You could go hire a marketing manager, a YouTube agency, whatever. You go hire a who that could go literally put people through that. Well, that who costs money, and putting people through that costs money. That's what corporate credit can completely change your world. Where people think that they should just work hard, save their money, and live off what they make. And that is not enterprise, right? When you hear people say my company's worth X, it's enterprise value typically, right? And so go look that up on ChatGPT if you don't know what it is. Learn. Like when you hear words that you don't know, go learn. That's what's going to give you the thinking edge that will change everything. Because when you see it, as Wayne Dyer says, when you see it, you'll believe it, or when you believe it, you'll see it. Right? When you see this, you realize you don't need to figure out a lot in a business before you need to go find capital. So is business credit harder to get than personal credit, or what's the deal on that?
It's not harder. It is a little bit more of a process. So the reason that I explain it that way is when you turn 18 and you get your first credit card, car loan, student loan, they start judging you off that credit history right away, right? But on the business side, it is something that you have to apply for, maintain, and build. So harder is not the word, but it is a detailed process. What we've done is we've broke it up into a 7-step process that walks you through exactly how to go through and build the largest lines of credit possible. But remember this as well, it takes time to build personal credit and it takes time to build business credit. And I don't know what you're going to need it for, but whether it's a year, 5 years, 10 years down the road, to your point, whether it's a marketing expense, whether it's the who, what I like that you said, like, I really love the book Rocket Fuel by Gino Wickman, where he identifies, it's so good.
Great book.
And he identifies visionaries versus integrators. And Shannon knows both of us now. And she knows Steve is our CEO here. He's the visionary. He's thinking 5 years into the future on where money's coming from, where I don't even know what I'm going to have for lunch today. I like sitting in front of this screen and talking about entities and tax. I enjoy this. And we complement each other well that way. And as you get to make money, you get to hire out what you don't want to do or what you're not an expert at. So you either partner with the right people or you have to go find the money to be able to accelerate. And it's not all about the money. It's also partially about enjoying what you're doing. So enjoy the process, have fun doing the things that you don't want to do. Because right now, a lot of you are the janitor, the marketer, the salesperson, you're everything right now, right? What don't you like as much? And what's it going to take to hire someone to do it that allows you to be in your lane of genius to focus on the things that you love? And Shanda, I'm sure you'd say you've got an amazing team, and I know that, and it allows you to focus on what it is that you want to do to be able to move forward. I think it's powerful stuff.
It is. So, Tommy, okay, quick question. How many guys want Tommy's information? Do you know that it took me literally almost 4 years to get outside my uncle, my friend's friend, somebody I found back in the yellow pages or on Google? Like it's so wild because I would interview so many people, Tommy. Like I'd interview so many people and I would just like notice discrepancies. And it was like they were all telling me the same story. Right? Like it was the same story. Like I came from Canada to America and I'm like, I hate same story, guys. Same story is, make some money, pay a 401k,
they tell you paying taxes is a good thing because that means you're making money. That's not a good thing.
Comments, these really dumb comments, right? And it's like, and I'm like, I know there's a better way. I used to walk around and go, I know there's a better way. It's like a hook. I need to hook into this better way. So Tommy is the better way. I will tell you that we have searched long and hard. And I was even telling our team we should be talking to you guys more about corporate credit as we are really branching out more into that scenario. As I'm looking at going, gosh, if I had another 3.5 million or another 4 million, I could do this deal or I could do that deal. And that would save me all these years of my life of trying to generate more income. You guys following me? right? Like it's like as soon as you figure out what you're selling, who you're selling to, and the profit margins and how to sell, which can happen in a VIP day. It can happen in 2 quarters. For some of you guys, it's already happened, but yet you're still trying to grow too slow. You're like, if when I sit in front of more people, well, they buy. Okay. So why are you just working off of the money you've made? Go get corporate credit, right? Or whatever that looks like. But we're scared to because nobody's taught us how to understand money, how to understand how to manage the money. Some of you guys have gotten money before and didn't manage it right, and then you're scared of it. You cannot be scared of it. When we all fell off a bike, we got back up. We got back up. And that's why we walk today, breathe today, get back into relationships. You've got to realize it's the same thing with money. Like self-reflect and learn, but learn the right lessons. So Tommy, how did they get a hold of you? Do we have a link or something?
Yeah, I had Weston jumped on here as well, who's on our team, and then he's putting a link together real quick, and he'll drop it in the chat for everybody. And what we'll do.
Oh, there.
Oh,
Weston
you're the
popped it in
best.
there, you guys.
You're the best. Thank you. Um, what we'll do is that is a free hour consultation for all of you. So click on the link, schedule a call. Please make sure that it's a time that works for you because it's free for you, but I still got to pay my team. So 45 minutes to an hour. And when you go into that call, get the most out of it for what you want, whether it's entity structure, business credit development, tax planning, tax prep. We even do estate planning as well, trust, wills, living wills, power of attorneys. So whatever it is that you need that's going to help you move the needle in 2025 forward, please make it happen. And then to your point around the credit, I just want to come back to this.
Mm-hmm.
A couple of years ago, I own 78 doors of real estate right now. My wife got her real estate license so that we could write off real estate depreciation like you've done on the California side. My cousin got laid off from his job, lives in Missouri, very, very small town. And I bought 12 properties there. It's about 50 acres, and he's just managing them so that he has something to do. He has a job, right? And it benefited me. It helped the family members. I share that with you because I've been building credit off of my entity for about 8 or 9 years. I've never been to Missouri. If you told me 8 or 9 years ago I'd be buying property in Missouri, I would have called you crazy. And I share that because if right now you're like, what will I need this for? Or how will this really impact me? Saving money in taxes and having more funding opportunities to build, grow, and scale more money long term will be a benefit for you as a business owner long term, no doubt about that.
Well, and I will also say, so if obviously this is for people that are in the US, not Canada, right, Tommy? So Weston put a link in the chat. You guys on social media, maybe Keith or somebody watching right now on our team could take Weston's link and go put it over on Facebook and YouTube for them. That would be nice, please, you guys. So you guys on social, it's coming. Give them a second; they'll go post it over there. But my point is that another thing that I think helped me is to ask if you don't understand a strategy. So something you said that I wrote down, but it's literally how I approached this world. And I don't know why I approached it this way, but I think it's because I kept seeing the pattern that was the same advice. Because I started wealth building when I was in my 20s and I just kept being told to get married. And I was like, I don't want to get married. Like I'm not, like that's not where I'm at. Now I know many of you guys are past the get married stage, right? But like I didn't want to get married. I didn't want to have children at that point in my life. And so a lot of times people are giving you these blanket kind of, are you guys with me on this? They're giving you this blanket like wealth advice to get ahead. Same with like buy a house. Have you ever looked at your insurance, your mortgage, your taxes on your house, like really added it up and then looked at how much it will cost when you sell it? You know what I mean? Like we have 3 homes right now and I'm like saying to Ash, I'm like, after I give birth, because I'm going to go give birth in Cali because I trust my doctor there. I'm like, we should liquidate that house and put it into multiple doors. We can go buy another house, but we should have that money creating like passive income for us. And we should be 1031ing that property into something if we can, right? Which means I need to go get advice. You guys also do a lot of real estate, right? And so it's like, you got to understand this because like, if I go sell that house in California, I have 5.5 million in it. And if I go sell that house, I'm going to walk with about 2.4 million. In Puerto Rico, hear me when I say this is not a pull on Puerto Rico. Because I have an advantage on taxes here, in 1 year, I make the same amount of money I made over there after taxes. I made more money over there, but I'm not keeping more. Okay, I make the same amount of money, but it took me 8 years or 9 years to hit that.
Yeah, it's
Are you
amazing.
guys hearing me? The coast of California, when by the time we take all of our fees out, taxes, all of that, if we just sell it, we make more money at a tax advantage state. Now, he's that resource for you. Do you see what I'm saying? But you need to think, here was the nugget I wanted to land on. What are your goals? In my 20, my goals were to create an insurance plan if I blew up my business. I wanted something I couldn't lose money in, and I wanted something that I could, that was liquid. That's why I did a very specific life insurance policy. Okay, and it's not set up like a regular life insurance policy. It's set up like a bank. Okay, we just reduced my death benefits now, so the cost of that policy is a lot lower. You may or may not understand what I'm saying, but I bet your gut is hearing something. Right? It's like, what does she know? It wasn't what do I know? I just didn't settle on the average advisor. Okay, until somebody told me something different that aligned to my goals, that's when I started paying attention. So I knew what my goal was. I wanted something liquid. I wanted something that if I had a bad year, I didn't have to pay into it. I never missed a payment, but I needed that insurance because of where I was in my build, right? Now it's very different. I don't want any more houses. I want passive income all day long. My friends that have so much passive income, I wish I would have started there, by the way. My son will start there. He's already starting there. Right? He's like, I want to buy this, I want to buy that. I was like, you don't have enough passive income to do that. Well, Mom, what's that? You're trying to live off the money you're making, which means you're eventually going to have a bad year or 2 or 3. And now you're in trouble. This is wisdom we don't all have to have, but I'm sad to say probably many of us have had it where you have bad years, right? Where things are tight. Well, if you would have started a little earlier, like people think creating passive income means you have to have a lot of money. No, you just need a better plan. So you know where your money's going. So that's creating passive income. So that's all I care about now. I'm like, I want passive income to pay for my life. That's it. I never want to have a job again. I never want to have to do anything again. I want 100%. Could you imagine how good you become when money is never, ever, ever a reason why you do anything? You guys picking up what I'm putting down? So you might want to just hear that right now and go, when you go onto that link and you book a call with them, be like, you know what? I just love what Shanda said. I want to build something with passive income. Well, then they're going to teach you about money and how to think, okay, well, let's look at your life right now. What would you need to start doing? And then you will get smart to it. Okay, you will get smart to it.
Active income, just to add to this real quick, I'm like chomping at the bit hearing this because everything you just said is so true. And I want to reiterate, active income is taxed between 10 and 37% on the federal level. Passive income is taxed between 0 and 20. So what she's saying is not only does your money work for you to create more time freedom, it's a 17% haircut off the top because the IRS likes predictability. They know you're passively going to make money year over year. So they're going to reward you by saying you're going to get a lower tax bracket. Identifying the type of income you're generating and creating passive as opposed to active not only gives you time freedom to be more of who you want, but it also saves you a lot of money in tax as well.
100%. And you guys in Canada, by the way, you can be investing in the United States. Everybody I know in Canada is invested in the United States. So just FYI. So there is that as well. Weston, could you pop the link back in the chat? Hopefully my team went and put it on social media if there's any spots left. But this is, when you go to that call with what's your goal? And if you need an entity, obviously they can talk to you about helping you do that. But what's your goal? What do you want to create? And then what would be the best way to do that? If you don't go in with that, you will be like a ping pong, right? Because there's so many great ways to be able to get free. What's the way that's going to motivate you? Okay, and that will change your game in your business all year. When you have an intention and a reason, you just show up so differently than just feeling like you're on the hamster wheel. And I've lived that way where I've felt like I'm on the hamster wheel and there's no light at the end of the tunnel. So it's amazing how money starts to generate when it's got a place to go. Okay, and when it doesn't have a place to go, you become indecisive, you become frustrated, you don't make decisions, you make bad decisions because you don't know where you're going. And when you know where you're going, it changes the game. So imagine, I'm going to end on this, building a meaningful year. A meaningful year. A year that you can see the light at the end of the tunnel because you've got a plan that's being managed and focused on, and it's being built around your strengths and where you're at now and where you want to go. So it changes the game. So here's to putting some injection of motivation underneath you. Hopefully, who booked a call with them, by the way? I'm just curious. Who booked a call with them? And if you guys put me in the chat, I'm just curious. Who booked a call with them? Only one person, Dawn, Karen, Mia, Zoom user, Beth, Denise, awesome, Zaddy, so good. I love seeing my team booking calls. I love that. That's so good. Awesome. Esteban, so good. All of you guys should have booked a call. That's all I gotta say. All of you guys should have to book a call because I think it's absolutely insane to not get educated around this. And Tommy, that was an incredibly generous offer because they're meeting with people who understand money and understand how to structure, which is a word that a lot of people don't know and they don't grab onto. There's a difference between getting advice and getting advice that's structure. And structure advice makes people more money at every level of the game. Any final words for us, Tommy?
Have a year. I'm cheering for each and every one of you. If there's anything that we can do to help, please reach out. We are here to help. And it's been a long time since I've seen you and the team, but let's, if this has been valuable and great information, we've got plenty of people in this building that are much smarter than myself, and whatever people want to know, let us know whatever we can do to help around credit, estate, tax, and we'll make it happen.
So good. People are asking for that link again, Weston or Keith. Yeah, gosh, I could go forever. Oh, I love that. They all went boom, they all hit it. I could go forever with you. And this is a conversation that is weekly inside of our company because it's just so motivating. You know, it's so motivating. Awesome. Can you guys give Tommy a big hug? I hope you guys love Shanda On Demand today. We will be back next Tuesday with some incredibly valuable information to help you have a 2025 strong year. All right, you guys, let's unmute the lines and say goodbye. Say goodbye to Tommy. Let's unmute the lines.
Congrats on baby boy.